Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday. Welcome to this week's episode of the Prime Property Finance Podcast, where we're going to go beyond bricks and mortar and talk about building real financial security. And we're going to be talking about life insurance. So it's no-nonsense insights into helping you grow and protect your wealth. So before we dive into this week's episode, I just wanted to give you a quick personal update of what's been going on in my life. It's coming to the end of summer. I've been on holiday to Disney in Florida with the family for a couple of weeks. It's been a fantastic trip. Great to switch off on business and really spend some quality time with the family. It was a busy time, of course, a fantastic experience. The kids absolutely loved it. And my daughters started comprehensive school this week. So it's been a big change in the guard. It's been a nice break and it's been great to spend some time with them. But back to it, and really excited for what September and the rest of the year is going to bring. So let's dive into this episode. You're building a great life. The house, the kids, the business, and maybe some investments. But what if tomorrow something happens to you? No plan, no cover, and suddenly your family is grieving and now they're financially exposed. The very assets you've worked so hard for could become liabilities. Now flip that. Same scenario, but you have proper life cover in place. The mortgage is cleared, there's money in the bank, and your family can grieve in peace, stay in their home, and rebuild without any pressure. Today's episode is about the one thing that should come before all investing, property buying, and wealth building, and that's life insurance. I'm going to give you the 7 steps to get it right and make sure your family is always protected. So what is life insurance? Life insurance is a policy that pays out a tax-free lump sum or an income to your loved ones if you pass away. And one thing certain in life is that we're all going to pass away at some point. So it's really simple, it's really powerful, but it is often overlooked. Why does it matter? Because your assets aren't worth anything to your family if they can't keep them. Most assets in the UK do have mortgages on them. There are debt associated with them, especially in the early years as you're building. As people hit towards retirement age, they may have paid down a lot of their debt, or they might not have any debt at all, and life cover becomes less important. But in the earlier years, and whilst you're building and growing your portfolio and you've got a young family, life cover protects your people, your property, and your legacy. When to get it? Right now. The earlier to do it, the cheaper it is, and the more peace of mind you create. The younger you get it, the cheaper it is. And so the early planning is much better than leaving it till later on in life as you're older, or as you may get some illnesses, which makes it more difficult to get and more expensive. Who needs it? Everyone, basically. Homeowners, parents, landlords, and business owners. If anyone relies on your income or you've got debts that you need to cover, then you need it. You want to leave your family and your partner in a place where they don't have to stress. If they lose you, obviously they love you. And if they lose you suddenly and they aren't expecting it, and you leave them with a load of debt, that's a nightmare that they're not going to want to deal with, especially if they're relying on you. So let's talk about the 7 steps to getting life insurance right. Step 1 is know what you're protecting. Start with the basics. What would need covering if you were gone tomorrow? If you have a mortgage, if you're paying rent, are you tied into a commitment? Are you for the rent? And could your family pay the rent if you're not there anymore? So this isn't just for homeowners. This is for anyone who has a home over their head. Maslow's hierarchy of needs talks about the key things in life, which are shelter and food. If you're not here anymore, who's going to provide shelter and food for your family? And then, you can take that up a level then. And if you might have children's school fees, if they go to a private school, do you want to protect their level of income over the longer term and to maintain their lifestyle? So it's not just about getting the basic needs met, but you want to maintain a certain lifestyle. If you're the sole breadwinner, then if you're just going to cover, if you just have enough life cover, let's keep this simple. If you earn £50,000 a year and you have £200,000 worth of life cover, that effectively is 4 years of salary. Now, if you have young children, that 4 years of salary isn't going to go very far. So you'd be wanting to protect those children and your family until your children are at least 16, 18, 21, 25, because the cost of living, the cost of bringing up children. And the last time I saw some figures on the cost of bringing up a child from the age of, from they're born up to the age of 18 was over £200,000 per child. And that's at a very basic level. So, and that's over 18 years. So you can imagine if you add more children to that, the cost of living has gone up a lot over the last few years. So it's really important to understand what you're protecting. So what you need to do is add up your financial commitments and think about how long your loved ones would need support for. And then ultimately you can't protect everything, but you can protect the most important things. Step 2 is choosing the right type of cover. Life insurance isn't a one size fits all. There's different types of cover. There's level term assurance, there's decreasing term assurance, there's family income benefit, and there's whole of life cover. So decreasing term works for your mortgage. So if you take out a repayment mortgage, as you pay off the mortgage, the decreasing term assurance will fall and reduce in line with you paying off your mortgage on a repayment basis. And usually the term matches and the amount matches, so that if you die at any point during the repayment of your mortgage, the life insurance will pay off the mortgage. And decreasing term assurance is the cheapest type of life insurance available. And then level term assurance or family income benefit helps protect your family's lifestyle. So these are usually put in place above the mortgage protection to pay out. The decreasing term will pay off the mortgage. And then if you were to die, the level term or the family income benefit will pay out an additional lump sum to help protect your family's lifestyle. So your cover should match your risks and not just your budget. Of course, budget is important with the cost of everything going up, but it's making sure that you have the right cover in place. And the final type of cover that I mentioned is whole of life policy. And we're seeing a huge increase in demand for this now because the government's changing the stance of inheritance tax. So whole of life really are used for two reasons in our experience. One is where people want a small amount of cover, they may not have an inheritance tax liability, but they want to guarantee that they're going to leave some money for their family. That might be 25,000, 50,000 when they die. So a whole of life policy pays out a lump sum when you die, as opposed to a life insurance policy, which has a fixed end date. It might have a 25-year term. It might take you up to 65 or 70 or 75 years of age. When you pass that age, it finishes. With a whole of life policy, that pays out regardless of your age. So another reason that people would have a whole of life policy now and in the past is to cover inheritance tax liability. So if you've got a substantial portfolio, anything or assets over £1 million, so to keep it really simple, if you've got substantial portfolio and assets worth, let's say, £2 million, and you're married and your lifetime allowances hit £1 million, anything over £1 million would be liable to inheritance tax. So 2 million minus your million allowance leaves £1 million worth of money that would be liable to inheritance tax, which is currently 40%. So a £400,000 tax liability on your death. So anyone with a £2 million, a couple with a £2 million £2 million worth of assets would have a £400,000 worth liability. What people are doing now is taking out a whole of life cover for the 400,000, so that pays out on the second death in order to cover the tax liability. So it's just, again, it's planning, financial planning, to make sure that your family are looked after and they don't have any stress to try and find the £400,000 on your death. That's step 2, is choosing the right type of cover. Step 3 is not relying on work benefits alone. So you might have some death in service from your job, but that's not portable and it might not be enough. So yes, it's great if you do have some death in service from your current employer. However, if you switch jobs, you become self-employed, or your employer reduces the benefits, you are potentially exposed if you're relying purely on that. So use it as part of your overall plan, and it's great to know that you have it. But your life cover should follow you and not your job. And so don't rely purely on death in service as a protection. It's great to have it, but it's best to have some other personal cover. So if your employer does change circumstances, or you do leave your job to a job that doesn't have it, you might be there for 10 years, but in 10 years' time, it'll be a lot more expensive for you. Step 4 is using a protection advisor and not a comparison site. Obviously, comparison sites show prices and not policies, and they don't consider your health, occupation, or your future needs as part of your overall planning and strategy. A broker or advisor will find you a policy that's tailored and underwritten properly, so it pays out when it needs to. Brokers understand the different insurers and their different policies and how they work. So necessarily a comparison site will only price generally on price, and you don't want a cheap policy, you want the right policy. So making sure you understand the circumstances around your overall plan, your children, your mortgage, any other assets you have in the background, and actually getting advice on that. One of the key things around using an advisor is that they're there when the time of a claim comes in. If you need to make a claim, I remember a claim that I had to go to, or we went and helped somebody, a client of ours, unfortunately committed suicide because of they were struggling with lots of things going on in their lives, and we'd set up a policy for them, and obviously they committed suicide, and we went to help the family with a claim. They didn't know where to start, they didn't know what to do. Obviously they were going through a lot of strife at that time, a lot of stress, and so for us to be able to help them with that, go through the claims process, apply for the claim on their behalf, was just a huge help and support for them, which they wouldn't have had. Somebody from a comparison site wouldn't have come out to the house and helped them with that. So it's having somebody who's a trusted advisor is so important when it comes to this stuff. Step 5 is consider different options that you can add on to a life insurance policy, such as critical illness and income protection. There are the key pillars of the protection. We're going to dive into those in more detail in other episodes, but just to understand that life insurance covers death. But if you're diagnosed with cancer or a heart attack, or you can't work due to an illness or injury, then critical illness and income protection are super important. So critical illness pays out on the diagnosis of a critical illness. So if you can't work, or if you need private treatment, then that would give you an additional lump sum. So then that's not if you pass away. And income protection replaces your salary monthly if you're off work long term. So you could be off long-term sickness. You may get some support from your employer or not, but this will cover your monthly expenses. So ultimately, your greatest asset isn't your house. It's your ability to earn and protect it. And this is something that I see quite a lot, is that people will cover their mobile phone as an insurance. They have an insurance for their mobile phone, which they might be paying £7 or £10 a month for. And that mobile phone may be worth anywhere between £500 and £1,000. However, what are you worth? And you can get life insurance from anywhere between £5 and £10 a month for a basic level of insurance. And if you're earning £20,000 a year on minimum wage, 5 times your salary is £100,000 for £5 to £10 a month. That is absolutely great value. And so just people need to understand that they are the biggest asset in their family, in their household, and not the bricks and mortar that keeps them warm at night. So step 6 is put in the policy in trust. If your policy isn't written in trust, it can be taxed and it can be delayed in probate. So even if you have a will in place, there is a chance that your estate will go to probate. And so having your life insurance written in trust means that it pays out quickly and it pays out to the people that you want it to pay it out to. So trusts allow the money to go directly to your chosen beneficiaries, fast, tax-free, and outside of your estate, which, as we talked about a little bit earlier, under inheritance tax, that's a huge, huge potential tax saving. It's free to do and it's massively powerful, and most people do miss this step, so don't fall into that bracket. And again, this is something that an advisor will help you with, and unlikely that a comparison site will help you with. And then step 7 is review your cover regularly. Your life changes, and so should your protection. As you buy, as you move up the property ladder and you buy a bigger house, then you need to increase. If you're increasing the debt, you might be remortgaging your house to take out a loan to do an extension, or to increase maybe add a room in the loft. You might have a new baby. You might have a second child, a third child, a fourth child. You might be selling your business. You might be going from employed to self-employed. These things happen all the time, so it's important to check in regularly, every 12 months or so, and review your policy. Any major life changes, don't set and forget it. It's not a policy that you set up for 25, 30 years and never review it ever again. Your life cover should grow with your life. So as things change, it's important to check back and make sure the right cover is in place. So ultimately, you've protected the bricks, but what about the people inside? Life insurance is the financial seatbelt your family needs, and you only get one chance to get it right. So if you've got a mortgage, a business, a family, and no life cover, today should be a wake-up call for you. Speak to a broker and get a proper protection review sorted. It's one of the simplest and most important things you can do for your family. If you want help getting the right policy in place, get in touch with us, drop us a DM at Gareth Morgan Property on Instagram, or you can contact us at primeproperty.finance, and let's get it sorted for you. Thanks for listening, and see you on the next episode. So thanks for listening to this week's episode. If you want to talk about any life insurance or any other type of insurance and you'd like to have a chat with us, then as I said, please get in touch, drop us a message, or if you've got any questions that you'd like answered, then again, please get in touch and we'd be more than happy to cover those off as a topic. If you think you know someone who might not be covered properly and would like to chat with us, then please share, like and review a podcast. If you're enjoying it, it really does help. And we look forward to seeing you on the next episode.